Hi, I'm Wade Johnson, partner of Cutcher Neale Wealth Management, and I'm joined today with my portfolio manager, Ryan Thompson, to give you a market and portfolio update for the June quarter. While international equity markets improved in the June quarter, momentum slowed compared to the March quarter, partly due to revised interest rate expectations in the US. Earlier in the year, the market participants had priced in up to 6 interest rate cuts in the US, but this was scaled back to 2 cuts starting in September. The strength of the US job market, persistent services inflation, and overall economic resilience worldwide contributed to this shift. However, inflation has continued to trend downward without significantly impacting employment. In the US, the cash rate remained at 5.25 to 5.5% over the June quarter. Year-on-year headline inflation softened from 3.5% in March to 3.3% in May. The unemployment rate increased slightly from 3.8% to 4%, while quarterly inflation-adjusted economic growth rose to 1.4%. In Europe, the European Central Bank cut its policy rate by 25 basis points to 3.75%, while the Bank of England held steady at 5.25%. Inflation in Europe fell closer to target ranges, though economic output was weaker compared to the US. Switching to Australia, the economy showed weak growth with inflation-adjusted economic activity up just 0.1% quarter on quarter. Retail sales were soft and inventories built up. Despite stronger than expected inflation and stable employment, the first cash rate cut expected in September has been delayed to mid-2025. This has come as no surprise to us. The Australian cash rate remained at 4.35%, with headline inflation higher than expected at 4% and the unemployment rate steady at 4%.
The Cutcher Neale International Shares model continued its strong run, growing over 3% during the June quarter. Superior stock selection drove outperformance, with key contributors from the information technology and healthcare sectors, such as Nvidia up 34%, Alphabet up 18%, Eli Lilly up 14%, and Boston Scientific up 10%. Other notable performers included Sumitomo Mitsui Financial Group up 11% and Walmart up 10%. Nvidia exceeded estimates and upgraded its earnings guidance, driven by a strong data center demand and a 10-for-1 stock split. Sumitomo Mitsui also reported strong results, increasing dividends and announcing a 100 billion yen share buyback. Switching to the Cutcher Neale Australian shares model, like the Australian market, the portfolio was down slightly during the quarter. Financials like National Australia Bank up 7%, Macquarie Bank up 5% and Hub24 up 10% were the main contributors. Gold miner Newmont up 19% also performed well, benefiting from higher gold prices and exceeding production, revenue and earnings estimates. Meanwhile, Hub24 reported that its ambitious target of $92 to $100 billion of funds under administration for the 2025 financial year was on track, and that it would complete a $50 million share buyback by the end of the third quarter.
Despite the challenges and uncertainties, we remain cautiously optimistic for the year ahead. Inflation has fallen considerably and continues to trend lower, and we believe the 2025 financial year presents a favourable market environment as the path towards lower interest rates becomes clearer. We're closely watching the highly anticipated US election in November, and we will continue to monitor geopolitical events as they continue to evolve and adjust portfolio positioning as required. As always, I encourage you to reach out to your Cutcher Neale advisor with any questions or to arrange a meeting. We'll see you in November for another quarterly update.